I simply went ahead and tested this idea of what happens if you weight companies by sales? What happens if you weight them by book value? What happens if you select them first by sales or book value and then weight them accordingly? And found that it performed much better than I ever thought was likely. And of course, as we began our research, we developed deeper and deeper understanding of why it works, how it works, and ultimately published the article in early 2005 that set the stages for what's become really a smart beta revolution.
I think the idea of beta is misunderstood now that smart beta is getting into the marketing stream of things. Beta is like oxygen. I mean, you either have oxygen or you don't have oxygen. With beta, which is the sensitivity of a portfolio to the movements of the market, there can't be smart movements or dumb movements. I mean, there is just the movement of a portfolio to the market. So there's only beta. There's no smart beta and there's no dumb beta. There's just beta. So it's a marketing term.
What distinguishes smart beta is that you're looking at indexes in which the link of the weight of a company in the index to its price is severed. The weight is no longer tied to the price so that it doesn't become a larger and larger share of the index as it becomes more expensive. That's a common denominator, a shared element of all of the smart beta strategies. And so I didn't coin the expression smart beta. I don't know who did. I think it's a clever tagline. All of these strategies win not because they have some sort of mystical powers or some sort of special design attributes, but because they break that link. That's the source of the incremental return.
The smart beta ETFs, okay, I don't even want to use the term smart beta ETFs, okay. The factor-based ETFs worth considering, which means that the idea behind factor-based investing is that there are different risks in the market. There is the risk of value outperforming growth over the long term, so you could call that a beta. There's the risk of small cap stocks outperforming large cap stocks. You could call that a beta, but they are more riskier to be in value stocks and to be in small cap stocks. And you're getting a premium for doing it so that when you invest your portfolio more in small cap and more in value, it's called multi-factor investing. It's been that way for many, many years. People know it as multi-factor investing. The term smart beta isn't saying what it is. There are maybe additional betas that are packed into a portfolio, but these betas are not smart.
Those of us who have been looking at the ETF space for a while, you see all the pure beta, traditional indexes, that landscape has been populated. So everybody thought the next wave was going to be active. And there have been some active success stories out there, but it's tougher to get approval through the SEC for active. So index providers and ETF providers have come together to find this middle ground where smart beta, active indexes has just exploded. And on top of that, some that have had track record, like fundamental indexing, are actually showing some alpha with less volatility. So it's been a great success story without having to be in the active space. Kind of, I think, something unexpected.
Now, if there's smart beta, does that mean there's dumb beta out there? Or what do you make of that term?
So, smart beta, absolutely. Is some of the smart beta going to end up being dumb beta? Well, it's all going to be in the performance, right? So, like anything, when you create something new, and that's the innovative process here, and the great thing about ETFs, you can create an idea, you can throw it into somebody's skunk works at an index factory, and if you actually produce this performance that's better than a pure benchmark like the S&P 500, it's wonderful once you launch it. But in the end, what does that performance look like going forward? And it's all going to be, you know, what happens going forward. If it ends up outperforming, great. If it ends up underperforming, then maybe it's the dumb beta world, right?